Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for a quarterly small cap growth virtual conference. Our next presentation is from Polymath. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Vince Kadar, Chief Executive Officer, and Natalie Hirsch, Chief Financial Officer of Polymath. Welcome, Vince and Natalie.
Thank you. Pleasure to be here. I guess let's just get right through that so that we can allow enough time for Q&A. All right. And so what we're going to cover today is actually who is Polymath? What is our blue sky opportunity? What are the offerings that we've got, and some of the strategic initiatives actually that we've got underway. And so who is Polymath? We're a technology company first and foremost. We are a pioneer in the class of tokenization and real world assets tokenization. We enable liquidity for illiquid assets such as real estate, collectibles, things that actually aren't traded today as a security. We were founded in 2017, and we've got 8 years of history, where we've been building technology and providing services and capabilities, and basically education for this space. We are a vertically integrated technology stack, and what that means is that we have our own layer one, we have our issuance platform. And we've got a full suite of technologies and tools and SDKs to be able to, provide a complete turnkey system, for a broker dealer, for a fund manager, for anybody that wants to, tokenize a particular asset. It could be, a money market fund, it could be debt, it could be credit, it could be multiple things. And where are we headed? Well, we're headed to being the first publicly traded layer one blockchain. Polymesh, which is the layer one blockchain that is a subsidiary of Polymath, was founded in 2021. And it's a utility token, is traded actively on several different exchanges globally. It's referred to as PolyX. It is an institutional grade, public permissioned blockchain designed for regulated markets and regulated assets. And really what's important here is that it is a purpose-built chain for the digitization of real-world assets for security tokens. So it's a regulatory friendly, it's a public permission chain. All node operators and validators have to carry a financial services license in order to operate an operate or validator node on the chain. And it is truly decentralized as well. So let's talk about some of the strategic transactions that are underway. First of all, we are about to close on the acquisition of Polymesh, and that is the layer one chain. Now, what's important here is this was a separate entity that was created by Polymath in 2021. It was set up actually as a not-for-profit, and as part of the transaction of going public, we've decided actually to incorporate Polymesh as part of the journey. It is now a subsidiary that has been domiciled in Cayman, where all the assets have been moved. That includes intellectual property, that includes a strong and healthy balance sheet with crypto and cash. And it provides the monetization potential that we see with this transaction going forward. And on deck is the RTO transaction with Analytics Insight. And this is not just an operating shell, but this is a strategic public listing. There are complementary technologies within the asset itself, or with inside analytics. There's an AI platform for public markets, and there's also a trading venue or a broker dealer with a trading platform in Milan in Italy, of which we own 49% of that particular entity. We see definite synergies with that asset, and definitely an opportunity actually to unlock value with that organization, with the assets that we carry today, with the layer one chain, with the issuance platform as well, and we'll get into that greater detail later. So what are some of the investment highlights? Well, we've out of the gate, we are a positive cash flow business. We've got a history of being profitable. We've always been mindful of actually the revenue that is generated through the multiple sources of revenue that we have, with the burn that we've got as well. And so consistently, our EBITDA margins have been above 25%. And that's just a demonstration of our operational efficiency, but then our also responsibility actually in order to run this organization with fiscal responsibility as well. We've got a SaaS and tokenization platform, and platforms is the pluralization of that, where we've got Token Studio, which was our first product out of the gate. It's a self-service application that allows you to mint a token and issue a security token on the chain. And we've got a full turnkey white labeled solution called Polymath Capital. And that is licensed out to broker dealers, to fund managers, to issuers, to startups, anybody that wants to tokenize a digital asset. And what's important here is this is a growing vertical with strong tailwinds. And so, we started to see, and this has been like I said, it's been an educational exercise. First, building the technology, educating the industry as far as what does tokenization allow, for this marketplace, and we saw the change actually in the market conditions with the change of administration in the U.S. market. That there's activity at the White House defining what tokenization does. We've seen narratives from BlackRock as well, identifying the $1 trillion market opportunity here. And this is truly a $1 trillion market opportunity. And we'll talk about that in further detail. And then what's also important here is that we've always been building a system that is, regulatory friendly and compliant for institutions. This is a public permission chain, as I stated. It's important that all the industry players understand that we're building a layer one of trust and a system of trust, actually, because all users are KYC'd, all issuers are KYC'd, all assets actually go through an underwriting stage that's required, from the securities industry. And we continue to build technology actually that serves to that purpose. And then lastly, a strong management team. So, Natalie's background comes out of, a strong operator. She was a head of operations at CoinSquare. So a strong operating background and a crypto background as well. Myself, I come out of actually several startups that I founded. Actually, my last business was acquired by Constellation Software. And so I've been in technology actually from day one. As well, who serves with us on the board is Devin Soni, a background in capital markets, and previously with Goldman Sachs. And David Hackett, actually, who's a chartered accountant and serving on several boards, actually, and would represent actually our head of the audit committee. So what is that blue sky opportunity? So it's a large blue sky opportunity with trillions of dollars of assets actually that are ripe for tokenization. So when you think about tokenization, what's important here, it's looking at the elements that are illiquid today, right? So real estate and fine art are great examples of our assets that are highly illiquid today, that are large opportunities that can be tokenized but then traded there afterwards. So the market for tokenization is about $19 trillion. And at least that's what Boston Consulting Group has actually forecasted here. When you think about real estate, actually from a global nature, that's well over $100 trillion of assets that can be tokenized actually rather easily. And that is the illiquid market that exists today. The market's expected to grow at an annual growth rate averaging at 53%. And it's due to this increasing institutional adoption that we're starting to see because the regulatory framework actually has been cleared and open. And as I stated, the activity in the White House is testament to the where the market is heading. The cryptocurrency task force has met several times. We've participated in these roundtable discussions in order to provide our guidance and input as what we're building here as an organization, and to provide directional guidance as far as where standardization should be. Tokenization is it's no longer a myth. It's actively happening today, and we've got evidence on chain with directionally ourselves, through tokenizing assets with companies, but also with our partners and partner companies that connect directly to our chain with their issuance platforms and running real organizations in Canada, the US, and in other markets as well. So what are these global trends? And as I said, there is activity in North America, United States, and Canada. There are issuance platforms that have been approved by our regulator in Ontario, the OSC, for issuing real estate backed tokens actually on our chain. US equivalently so, and you can go to our website and the Polymesh website to find logos of our customers, and we'll get into that and highlight some of them later. But in Europe, Switzerland, Middle East, APAC, and Latin America and Africa, a lot of activity actually that's going on. We're engaged in several different pilots and proof of concepts as well, where there again, a lot of interest in tokenizing these assets, and directionally, it's unlocking a great deal of value in these developing markets, or in the developing markets where I'd say regulatory frameworks aren't as strong. I think we're going to see a leapfrog, as we have seen it with other technologies such as banking and payments, where they're going to jump directly into tokenizing assets and setting up trading systems. So, where did we come and where are we going to? And this is important actually to really understand. Again, we started off in the paper era. We went digital in the 70s, on trading systems. We're in the early stages of early tokenizations. That was 2015 to 2022. And that's exactly the point when Polymath actually was birthed. And we built, again, Token Studio. Then we built our layer one chain. Our layer one chain, Polymesh, was created and launched on mainnet in October 2021. And it's been an educational exercise in order to get, build the ecosystem, build actually and connect actually the elements that are required from digital custodians. And now we're into the phase of I'd say hyper growth. And, we see that in the marketplace. We see, parties like BlackRock, like Fidelity as well, that are announcing projects, proof of concepts. BlackRock was the early mover in this marketplace when they tokenized, billions of dollars of money market funds. And, again, that just sets the stage for, opening up the market for many different other aspects to be tokenized, and traditional finance, but also, the new products that will come to market. And then there'll be additional products that come to market as we start building the total value that's locked on chain. Lending protocols will come, and, other elements as well, other financial products. So why tokenize assets? And this is very important point, because, what's wrong with the system that we have today? So blockchain technology, this really supports and sets the stage for tokenization. And why did we actually enter into the space? And why did we build a layer one chain? Well, first and foremost, there's the security and transparency of what we're doing, right? And because we're delivering a solution to the marketplace, there is some transparency to what we're doing. You could see actually the activity on the chain. You could see actually when there's a new issuer that's actually deployed on chain, and you can see the movement. So there's complete traceability and transparency when it comes to the movement of security tokens and who owns what on chain. It's the increased liquidity is the most important element in what we're doing as well, because now we create the opportunity for trading venues and liquidity venues, for these security tokens that are created. So when you think about real estate and tokenizing real estate, you're converting that asset from what it is today, from individual ownership or even shared ownership, but in the assets itself. And that's being converted over to a security, and security that can be traded, and traded actually in a nature much like, commodities and equities are actually traded actually on a daily basis as well. That can be done with art, that can be done with sports teams, that can be done with like collectibles as well. There's the global reach of this as well, where, again, security tokens can be traded, not traded, but also transferred actually to other markets on an international stage, for as long as actually that they are compliant and they are permitted to do so. And that comes to us via the programmable compliance that security tokens have. Because when you issue a security token, what you're doing is you're programming the compliance directly into that security itself. It's voting rights, it's yield, it's whether it's tradable, whether it's subject to lockup, several different aspects with regards to what transfer agents have to operate today. The machinery takes over tomorrow. Fractional ownership is a big element as well, where you're able to, again, fractionally divide ownership across thousands of different users, on a particular asset, whether it be the Mona Lisa, or maybe that first Ferrari actually that was, created that, that's in a showroom. So what are our offerings? And so now we get into the meat and potatoes of, what has Polymath been building, from, for the last 8 years. Well, first and foremost, we start off at our foundational level, which is Polymesh blockchain. It's our purpose-built layer one chain designed specifically for the regulated market and regulated assets. As I said, it's public permission. This is key because it's not a permissionless chain. Not anybody can operate on the chain, and not anybody can actually just set up a wallet on the chain. All validators go through a KYC process. You have to be a financial services regulator to operate a node on the chain. All users go through KYC as well, and identification to be issued a wallet on the chain. And all issuers also go through that as well, right? So if you're a broker dealer and you've got your own broker deal platform, you could connect directly to the chain, but you have to adhere to the governance rules of how to operate on the chain. Then we have our white label platform. That's our issuance platform. That's what we building at Polymath. And that is, again, we license that out to third parties, fund managers, broker dealers, any issuers, startups that are out there, people that want to, again, tokenize the asset, link it to your website, and run your particular offering. If you own the asset, you could do that. If you're a broker dealer, you've got a license to do that as well. You're just going to do it in a new streamlined way, via workflows that actually automate the back-end process, and via smart contracts that are actually going to take over as well. So there's real operational efficiencies actually with running it this way. We then also provide the capability for tradability in a bulletin board service, but connecting downstream actually to a decentralized exchange or an ATS environment actually when the market is permitting, and if the security tokens are programmed that they can be traded as well. And then what comes to us actually with Analytics Insight in that vehicle is a licensed exchange in Italy. And this will be subject to approvals as well. But, with that asset, comes to us with a technology company called MarketWall with a consumer-facing business called Investo Pro as well. And that gives us a liquidity venue that's licensed across 22 markets in Europe. And that's the blue sky opportunity where, everything that we're putting on chain, everything that we're issuing through our white label platform is now tradable in a licensed venue. And that's that licensed venue that in Europe, but it'll give us the licensed venue actually that's in, or in the ability to replicate this capability in North America and other markets as well. So what are some of the technology solutions? And I'll just quickly go through this as well. We've been building the layer one chain for a very long time. That's launched in 2021. That is the core asset here. We focus on the compliance and KYC. On the product side, we've got our Token Studio, which has been our bread and butter for a long time. Capital is our new platform that we license out to to the marketplace. And Start Me Up is basically a free product that we want anybody and everybody to be able to use in order to tokenize an asset, and it's a market grab opportunity here. So again, let's bring assets on chain. Let's give people the ability and organizations the ability to test the waters before they completely open up the floodgates. So some of the ecosystem participants, and just and again, this is actually good a point in the discussion. Actually, we don't do this ourselves. We build the core infrastructure, but we also rely and we need, tier one participants in this marketplace in order to actually push this narrative forward. We've got a great roster and deck of tier one customers, tier one clients, and tier one partners actually that push this narrative. And that's starting off with the digital custodians in this marketplace, right? BDAX, digital custodian in Korea, Zodia, a digital custodian owned by Standard Chartered Bank, actually licensed in Europe and acquired a digital custodian in the UAE as well, and licensed through the Middle East. To Canada, Balance and Tetra Trust, and to the US, BitGo and Itana as well. Interesting, notable issuance platforms on our chain. RE Tokens, a real estate play in the U.S., licensed as a broker dealer to issue security tokens backed by real estate, and FINRA registered, and setting up a trading venue as well. Token Tracks, a music royalty platform that's issuing security tokens backed by music. And in Canada, we've also got the equivalent of RE Tokens called Okri as well. Issuing security tokens backed by real estate. Their first asset was a multi-tenant unit out in Winnipeg as well. And then several other notables as well, like from a KYC point of view, Jumio, Netkey, and Fractal, as well as SumSub as well. They're KYC partners that they onboard all the I'd say the digital wallets and go through the back end process of ensuring actually we remain from a compliance point of view. What are some of the big projects that we're working on, and proof of concepts as well? And so, again, we're active across the board. We're pulled into many working projects from activities in the UAE and RFPs, to a recent visit, that I made in Pakistan with the Minister of Finance and the Prime Minister of Pakistan, and the importance of what tokenization can do to foreign markets and foreign countries like that are trying to attract foreign investment as well. So you're being able to tokenize future revenue streams from a mine, as an example, to tokenizing, government-owned assets, actually, in order to attract foreign investment, to working with broker dealers and issuance platforms in the US and Canada and in Australia, as an example, right? So we've got, a wide audience and a wide, and I think we could probably get to the next slide as well, a strong pipeline of activities where, what we'd like to do, and we've got a target of tokenizing $1 billion worth of assets on our chain. Our pipeline is currently at, 4 times that value. So being able to convert 25% of that is a realistic target for us. We're working with the large REITs in the Middle East, to projects that want to tokenize, $260 million worth of gold at a mint as well, and bringing that on chain, to several white labeled solutions that we're spinning up, in different verticals as well, from just traditional broker dealers to, very specific verticals such as real estate as well. But at the same time, we're supporting actually our ecosystem partners, and they've got their own pipeline of activity and assets that they're bringing on chain as well. So we're fairly confident that we can hit a target of $1 billion in the next 18 months. So what is our business model, and how do we generate revenue today, and how have we been generating revenue in the past? Well, it comes from 3 aspects. And starting from the right, our blockchain infrastructure. And so, we earn revenue through network transaction fees, and from other services that we provide actually at the core blockchain infrastructure level. Second point is our software as a service platform. So our Polymath Capital platform, that what we white label out to, our end customers actually. And so that's a traditional SaaS play where we're, again, we've got licensing the white label solution to broker dealers, fund managers, issuers, and specific verticals, then to our staking revenue as well. And staking, actually, the 280 million PolyX sits on our balance sheet today and earning yield. And so we've got several levers that we can pull actually, as far as being able to provide services and capabilities, and to offset revenue from one to to onsetting revenue to the other as well. And so how do we monetize actually this overall, ecosystem going forward and all the assets that we have? And so what's important here is that when we tokenize an asset and bring that on chain, right, at the top left, we then unlock revenue and revenue that's generated from licensing our SaaS platform, to B, when a token is issued on the chain, revenue is generated, to C, network transaction fees that are then created as well, because of that. When we do that, we're growing the total value that's locked on chain. That overall increases the overall value and appreciation of all assets on chain, which then increases the overall value of the overall combined enterprise and the chain itself. That then unlocks additional incremental assets actually and protocols that can then be from lending protocols to insurance actually that can be sold and allocated against the assets that are on chain as well. So incremental financial products that then can be introduced actually as part of all the assets that are locked on chain.
Okay, so getting to some of the financial snapshot here. So this is a super exciting week because we're actually about to close in on an important transaction connected to the reintegration of Polymesh into Polymath. That's the layer 1 that was split up a few years ago as a not-for-profit association, and we're bringing it back into the family as a for-profit entity domiciled in Cayman Islands. So if we're looking at pro forma audited statements from 2024, consolidated would have been about 18 million Canadian. And conservatively for 2025, we're looking at 20 million Canadian. Now, the majority, to be frank, in the last few years, the majority of revenue, I'd say 90 plus of revenue, is staking. So we earn about a 19.5% yield on assets that are bonded on chain. And if we do, anybody who comes in on top of that as a node operator would get an extra 10% yield. So sometimes the yield could be as high as 30%. So a majority of that staking revenue in the last few years has been helpful in terms of offering like working capital, etc. But to be fair, that 20 million expected for 2025 is really just a baseline, and we expect to diversify away from just staking. As Vince mentioned, there's a huge pipeline of sales prospects in our SaaS business line. And with that, we expect that we will have, contracts that are, upwards of $500,000 a year in terms of licensing fees for for our capital platform. So that'll help diversify away from staking as well. We're looking, and Vince will mention it in a second, to some M&A activity with some of the use of proceeds we're raising in this financing round before we go public. And that M&A activity hopefully will also add in additional recurring revenue, annual recurring revenue. So 20 million, good conservative estimate for 2025. In terms of assets, the asset purchase agreement we signed in May and are about to close with Polymesh brings in a combined total PolyX, our tokens, of 280 million to the balance sheet. The price of PolyX varies, starting the year at about 39 cents Canadian, currently at about 17 to 18 cents Canadian, so it does vary. We're looking pro forma once we go public with the raise proceeds that we're going through right now, about 26.5 million Canadian, and then approximately, depending on the trailing average of PolyX, about 65 million Canadian of PolyX. So in terms of the deal structure for a raise, we're actually, the pre-money valuation is below the net asset value, which is great. We're offering a discount on go public, and we expect, hopefully, with a strong balance sheet, that's a pretty compelling proposition. In terms of our pro forma capitalization table, once we close, we're raising, our pre-money valuation was 70 million for combined Polymesh and Polymath. Analytics Insight was coming in at about 5 million. So combined pre-money was 75 million, 18.75 million is the minimum we hope to raise. So about 93.5 million post-closing, and 73% of that will be founders and insiders that'll be locked up. And new investors, obviously, as part of the TSX fee requirement, which has since actually changed to only 10% required for go public, but we are still hoping at a minimum to do 20%. So we're looking at 20% for new investors. I pass it back to Vince, who will just tie things up with strategic initiatives and M&A.
Yeah. Thanks, Nat. And so just to tie this up, actually, so, we are going public. We are looking at closing our financing round July 17th. That's brokered by Canaccord, and go public. I think mid-September is actually the information here. What we'd like to do, actually, as we go public, it is to acquire incremental assets, additional assets that we will lock to and provide additional value for the Polymesh blockchain. So what's of interest to us is broker-dealer software, ATS software, cryptocurrency exchanges, things that will actually tie utility to our layer one chain, which will then increase overall value and activity on the chain as well. And so why should you be investing in Polymath? Well, we're technology leadership. We've got the years behind us to show that. We're financially stable. Again, years of financial stability and growth and responsibility. And then it's that growth potential. Again, this is a $1 trillion market opportunity that we're leaning into. And, the winds are behind us right now. Like the market's opened up and we've got a great opportunity in front of us.
And that's it, everyone. Thank you so much.